Yeah, well done everyone. Good day. It's been a while. I've posted last. I'll be talking on anatomy of candlestick part two. And which is also known as also the AMD pattern. Yeah, it's also known as the AMD pattern also, and also the power of three. You'll be hearing and get familiarized. You'll be you'll get familiarized with all these analogy, these theories, power of three. They are also the same thing. There's no difference. They're also the same thing. It's also called the anatomy of candle is the OLHC and OHLC, which is also the same thing as the accumulation, manipulation, and distribution, and also the power of three. So let's go to the real deal here. I thought this part one, which is on the YouTube channel. If you have not gone it, go and check it. Go and check the YouTube channel. Let me reduce this a little bit for okay. A minute, please. Sorry about that. Just give me a moment. Okay. So, trying to reduce this a little bit. So, I think it's better. So, the anatomy of candle I said is also the same thing as the AMD pattern, accumulation, manipulation, and distribution, and also known as the power of three. I'm going to go in depth into it, into anatomy of candle very well, which is also known as the open low high close and the open high low close, which is what you see now on a bullish scenario. Now every candle, but the daily from the monthly to the 1 minute opens and closes this way on a bullish scenario. Now price will open, then create a low, then what? Create an high, then closes. Irrespective of the time frame, you can see the time frame labeled. I have the monthly, weekly, daily, 4 hours. Irrespective, this is how every candle does. It is just like the skeletal system of the market. No matter the kind of strategy that you'll be working with, be it SMC, be it ICT, be it supply and demand, be it using, what are they calling it, indicators, using all sorts of algorithm. This is how price opens, right, and how and low of the day closes. This is it. The price will open this way, create a low, create an high, and closes, and that's how it happens on every time frame. Now you see on a bullish scenario, anytime you see an open for a bullish scenario, for a bullish trend, you see a low always be created before the high being created, then close. Then it moves to the next candle and does that consecutively. Now the same thing goes for a bearish scenario and a bearish trend. Price opens this way. Now if you check the system of a bullish scenario, you see that it is one system is created by creating the open, which is this, creating the low, which is this, creating an high first, and then creating the close. But it's different from the what bearish scenario. Now the bearish scenario, now it opens at the opposite. We are selling downward. It opens at the high part of the candle, creating a high, then creating a low, then creating a close. And that is how it does on every market, both commodities, stocks, FX, crypto, indices, So no matter the market has graph, this is how it opens. It opens, create an high, it creates a low, then closes. When the bullish market creates an open, creates a low, creates a high, and it closes. Now, the AMD pattern is something I'm going to go into later in the future, but I want you to understand it's the same thing. That is just the basics. That's why we call it anatomy of candle. But the explanation, going deeper into this part, then going into this part are all the same. If you understand this, you understand this, you understand it. So if you understand the anatomy of candle, you understand the AMD pattern, and you understand the power of 3 pattern. So, and I do tell people that the daily candle is an illusion. So trying to say, okay, this only happen on the daily is not a raw fact. It happens on every single time frame. I think I need to screenshot this so I can send the group. Sorry, this might take a while. I need to just give me a while. Just give me a moment, please. A moment, please. Okay. Sorry. Okay. So I'll screenshot this and send it to a link where you will be able to wrap your head around it, and you'll be able to use this. Do you understand now? You'll be able to use this. You'll be able to understand why the market opens. Now, if you understand this, you don't need to say about the direction of the market that much. The only factors that you need to factor in, because you cannot use this just on its own. You cannot use this just on its own. You need to put other things in factor to trade this market. I hope you understand. You need other things that you need to trade this market. Excuse me. Okay. Now I can do this now. My network is kind of dragging the system down. So yeah. So now this is what. A minute, please. Well, I don't know why this is taking a while. Okay. Yeah. So I'm going to drop this. Yeah. Yep. Give me a moment, okay? So I want us to go study this chart pattern I just dropped here, and you understand why we need to understand all this. You'll understand it later in the future, but I'm going deep now into this. So let's go into the chart. Okay. I think I need to clear everything. Now, this is the daily chart. This is the daily chart. I think I need to start from the last Friday. Now, okay, let me do it like this. Now, if you can look at this single candle here, this candle here. So we saw that this was a bearish candle. It's not a bullish candle. It's a bearish candle. A minute, please. Yeah, this is a bearish candle. Now, when price wanted to sell, this was the opening. The opening happened here. A minute, please. I think I have the. Okay, I think I should have it here. Yeah, the opening happened here, and this is how price does coming. Since we're on the weekly time frame, yeah, I'm trying to look for the opening price. Yeah, that is the opening price since we are selling. And if you check this, this is the candle that opened. We want to know the candle that opened. Now, this is where I said this is a bearish candle. Open, high, low, close. Opened, high, low, close. So now what's the open value? The open value for this, you check here where I'm putting my mouse. The open value for this is 07298. 072. Now look at that. 07298. So to get our exact price, that's our open value. That's the opening price for the bearish. Then we created the high of the day for the bearish. This is the high of the day. I'm sorry. High of the day. This can also be done on the weekly also. I think, okay, the high of the day, we look at this place also. The high of the day was 528. 528. 528. So that we can be right on the exact value. And the low of the day, this is where the low of the day was created. The low of the day was created here. To get our exact value for the low of the day, we look up here. The low of the day, you place your candle on that single candle here, and you see it is 06738. 06738. Wait, 039. Sorry. So that the value can be correct, we'll do that, and voila, the low of the day has been done. Then the closing price. This is where price closes, just as the diagram I sent to you. I sent to the link. This is the closing price. So I've already stated that before. I've already done all this before, so that's why it's on my chart. You can see it on my chart. So that's the closing price. So to get our closing price value, I'll place my candle on this candle to see my closing price value here, which is the, are you seeing it? I close by 909. 909. 909. So you see that is open, high, low, close. For a bearish scenario, open, high, low, close. The way I explained everything, I've explained it. Now let me go to the 15-minute chart to show you our price, what price did for that day. Now look at price opened around this area, which I told you is going to be around our 0.0. So now around, I told you that if you're going to be buying, you are going to buy above what? the opening price. I think I need to. If you're going to be buying, you're going to buy below the opening price, right? And if you're going to be selling, you're going to be selling above the opening price. Now, like this is the opening price for a what? For a sell. This is the opening price. Now, this is the opening price. Now, there are other indicators, other factors that you need to consider to sell. But we know that we're going to sell in this market because we have been bullish for this. Now, the opening price should be where you'll be selling will be above the opening price. Now, we know our opening price. Going back to 15 minutes is at 0.0. So I'll be buying at my midnight open. I'll be buying above, I'll be selling, above the midnight open and see what price did. So I don't need this, but I need my, so price what bought into this place. And because there are other key levels that we are respecting, that's why price rejected, sold below this low, breaking structure, which I'll also teach you guys. And what? We see our price retraced into what? This FEG, which I will also explain on the institutional reference point. But it's not now. I'll not be teaching you that immediately. You need to understand this. Now, we sold above opening price. Now, we have a market structure break here. And price what? Went back. After it broke, you saw it. This was a break of structure. After it broke, price still went back into what? Below what? Above the opening price to go and pick what trades. And what? Dumped. Do you understand now? The same thing happens every day by day. Now, I will check. This is for a bearish scenario. Let's go for a bullish scenario. Let's go for a bullish scenario. Yeah, I think I need to do this much more. Well, sorry. So, now this is a bullish scenario. Now we have been bullish all from this place. We have been bullish for a while. So when we saw that our international flow is being bullish, price closed above this candle. Price didn't close above, but we saw price closed above this. Okay, because of other institutional reference points that price has to respect. But now we saw this. Now this candle is a bullish candle. Now if we are going to buy, we are going to be buying below what's the opening price, and which our opening price is this level, this value here. A minute. Yeah. So our opening price will be bought below what? A minute, please. Okay. So I need the value for what this opening price here. You know what I said about coming here to discover our opening price. Now look at this time around is quite different. Since we are starting from a bullish scenario, we are buying below the opening price, so it's going to be open low, high close, open low, high close, open low, high close. Are you seeing it now? If you check your what, this extreme left of your what, if I place my candle here, you see it open low, high close. So the value for the opening price is what? 69987. So 987. Okay. 987. The low for the day, which is the low for this exactly. The low, well, coming in a minute, please. So the value for the low is going to be 782. 782. So I hope you're understanding everything I'm posting here. I'm doing here. Now the high for the day. So let me place my cursor on this candle. The high for the day, look at it, is 704, which is correct. And the closing price for this day, sorry about that, closing price for the day. Yeah, I check here when I place my cursor on this candle. Closing price for the day is 298. 298. Okay. 298. So now we have our open, low, high, close. Since we have our open, low, high, close here, I didn't have my subscription for this trading view, so you might see the previous days, the next day price encroaching on this, but it will still show everything. So I want to show you how price buys below the opening price. So I'm coming, trying to, price buys below. So I'll go to 15 minutes. This is I don't have the opening view, trading view, so pardon me. Okay, so now look at this. Are you seeing this? Can you believe what just happened here? Price what went all the way up. People thinking that we are bearish, we are bullish, did this. Now we didn't buy below. This is what price did. This is what price opened. A minute, please. This is what price opened. Okay. This is where price opened. Yeah. Price opened here. And see what price. The price didn't really come deep. You get now. Now what price did was we were selling. So we want to sell this market. Price went all the way up. Are you seeing it? Then what? We saw this spike down. We saw this spike down. Buying below. Are you seeing it? We bought below. Sorry, I think I did a mistake. We're looking at the bullish scenario, right? Yeah, we're looking at the bullish scenario. Now look at what price did here. Price, this is where we do have distortion in price. Yeah, this is where we do have distortion in price. Now, this was the opening price. Price went all the way, didn't create the high, went all the way down. This was a new spike, creating the high of the day. Now, what price was supposed to do was that it's supposed to create the low of the day. You understand now? So because we're in a bullish scenario, we were supposed to sell here. We were supposed to sell here, but we didn't sell. But price created the high at that moment and immediately came down to create the low below the opening, because that was a distortion in price already. So we created the low of the day here first. After creating the low, we went all the way and create the high back and closed. I hope you understand what I'm saying now. Now, there are times whereby if you check the candle, yeah, You saw that we didn't close above this. What? We didn't close above. We only have a sweep of this. Now we were supposed to sell. But what price this was this? Price went all the way, opening at this region. Are you seeing what I'm saying now? Oh, opening at this region, price did where went all the way up. Are you seeing that? Came down, creating what? A distortion in price, which caused an high being created instead of what? The low of the day being created first. So these are where you have various distortions. So price creates the low of the day. Immediately this distortion was created, then went all the way up. And now instead of creating the high, it didn't create the high. It closed. And the following day took out this high. But I need a better example. But this is an example. This happened once in a while in the market. And again, I need a more bullish scenario. Yeah, I think this is much more explainable also. It doesn't happen that way because that's a low, the opening, the high and the close. So I just want us to understand this. So price opened here. This is a typical example of a bullish candle also. You'll see the difference now. Let me place my candle here for the value. The opening is 186. So I think I'll increase this. The low of the day 186 also. The low wait a minute. The opening price for this also 186. Okay, I think this is correct. So the low is also why is this doing this? So the low, the low. Okay. And that's the low. Now we have the high here created here. Now look at the high here created. The high value, what's the high? The high value is 795. So we create the high and the closing price. What's the closing price? 27. I think everything is intact here. So we have different this is a bullish scenario now. I think I started with the bearish scenario now. I think let's go to the 30 minutes because of time. 30 minutes. Now are you seeing this? Are you seeing this? Now you saw price open at 1700, went all the way up, buy below the opening. That what price did here, creating the low of the day, then went all the way high, then what create the high, then what closed. I think the 15 minutes will show it even more. This is what happened. Apart from the distortion we experienced the last example, it doesn't happen. The distortion happens when we do have some funny price actions. Now this is it here. Now those that will want to buy will have tried to buy what below here, but you see where price bought at the 50% of the week. So those things, rejection block, these are those things that will be taught 50% of the week. These are all institutional reference point that are supposed to taking note of. But I'll explain that later in other videos. So we saw the buy went all the way down, then created the high of the day, then closed here. So these are things you see on chart on on every chart time frame, every time frame from the monthly. We know the monthly we have 4 weeks. And that was the monthly is a comparison of is a comparison of 4 weeks, 4 candles. This one candle has 4 candles in. This weekly also has 5 days candles in this one weekly candle. The monthly has 4 candles, and the monthly has 4 candles. It consists of 4 candles of the weekly candles, and the weekly candles consist of 5 days candles. This we have Friday. This weekly candle consists of 5 days candles. Let me show you. This is a particular week candle. Let me show you on 1 hour. I think I need to show you on 1 hour. So we have from Monday, Tuesday, Wednesday, Thursday, and Friday. So that's that weekly candle you saw. That one weekly candle consists of a 5 candles formation. The daily candle also consists of 4-hour candle. I think I need to dot this down for you guys. So, key points. Key points here. Okay. Monthly candle. Okay. Consists of 4 consists of consists of 4 weeks. 4 weeks from the weekly So the weekly candle consists of 5 days, 3 daily consists of system system whenever we system this way system with 24 hours candle hourly candle, sorry, 24 hourly candle. List of 4 hour consists of 2 these are what you will see. These are what you will see mostly on your chart. I think you should go back to the chart and see, and it opens the same way, both bearish and bullish. Like this now, you see this bearish candle as what's an opening high, low, close. You see this bullish candle as an open, low, high, close. Now these are candles that these are supposed to be a bullish candle, but it's not a bullish candle. This gap down. It gapped up to what remained down, so it's a bearish candle. So it was supposed to open low. Now let's see what happened here. It's supposed to open low, but if we check this candle, you see that it opened high. Let me check. I want to go far back. Yeah. I'm trying to let you to understand this. Now we have our opened. If you check, look at what the open is. The opening okay, this is a Tuesday candle. Where is the 7 o'clock? Now look at, it's a Tuesday candle. Now look at what price opened. Price opened here, went all the way up, creating the high of the day, then went on the way down to create the low. See, it went closer than that. It closed below the opening, then what closed here. It created the low beyond the opening, so it is a bearish candle. So you know that we are selling. Now the next, if you see this, you know that we are selling, and see our price jump from here. So that's what has been happening here. So I hope you enjoyed the video. I'll drop more content. So, and I'll show you guys more things to come. So please go to this video, watch, like, share with your friends, and also study the materials very well. I'll drop some nuggets that will help you to identify open, low, high, close, and we'll discuss about the MD pattern. We'll discuss much more deeper into power of 3, but those are the few things that you still need at the beginning of this journey. So thumbs up and enjoy yourself. Study the materials, and that is what, and study the chart also. Apply this to the chart, go into the chart and study, and you'll see success. Thank you very much.